section here. And Cody, young man, I want you to come on in here for a minute. You know, I was talking to a trader this morning, Noah, and she has been back testing and practicing and working on covered calls for 3 months, you know, and she's done enough paper and practice trading where she's like, Tim, I want to jump in the live market, but I'm nervous. And I said, well, I mean, it's got to be your choice. You know, it's your money. And after all, you're the trader, you're the investor. But if you want to try something that might be a little less nerve-wracking, maybe a covered call on one of these more affordable companies. Sometimes the covered call, and you nailed it right on the head earlier, can be intimidating. You know, to buy Boeing, you need 40 grand, right? It's $400 stock. But to buy some of these other companies like an AMAT, you know, $30 stock, E-Trade, $50 stock, AMD, $20 stock, they might be more approachable. And so what we did as coaches here in the pre-show is we handpicked these 5 stocks, okay? And Cody, explain why we picked these.
We picked them based off of we went to Tackle 25, so we already know that these are fundamentally good companies. And then we looked at what their pattern is now, whether they have earnings coming up. Just if we were looking to enter these trades today and start building cover calls today, we just said, okay, do we like the pattern right now? And went from there.
Mm-hmm. Now, this spreadsheet is called the Tackle Theta Research Spreadsheet. It's an evolution of teaching people for 14 years here with the other mentors and coaches. And one thing I do whenever I work with people one-on-one is you want to put them in a position to succeed by giving them structure and discipline. And so what we do is we fill these data points out one at a time. If you've never downloaded this spreadsheet,
really quick, Tim. Yeah. Actually, I think you were about to get to it. I was just going to say, every time we use the spreadsheet on YouTube, we always get comments asking, where do I download? The way you download is go over to Tackle 25, you sign up for pro membership, you get this spreadsheet and others for free.
Yeah, and it's a fantastic tool, by the way. And then you can download it directly to your system, and it has all of the different metrics. By the way, Cody, if you'll scroll down, it also has some rule designs on how we trade covered calls. You know, so in the notations, every time there's rules on how to play the covered calls, all those different details and whatnot. We're not going to go through that today. That's a course, right? And we're here in the halftime report. What I want to highlight is maybe build 1 or 2 of these, you know, with the time we have here. Let's see what we can get through. And let's kind of kill 2 birds with 1 stone. Let's have Noah, you and I, let's look up data as we go. And Cody, you plug it in the spreadsheet, okay?
All right. Yeah. Let's start with Newmont. Actually, why don't we switch off? Tim, you take Newmont. Noah, take AMAT. And just call them off.
Now, you've got Nucor there. I think we meant Newmont, N-E-M, not N-U-E.
Oh, excuse me.
I also dig on Nucor. It's a pretty cool company.
I do like that steel company as well, for sure. Okay, so I'm taking Newmont.
Yep.
All right. So your price is $35.60. We're going to do the March 29 DTE. We're going to sell the 36.5 strike at a 0.37 delta. Credit is 0.62.
All right, Noah, what do you got?
All right.
Tim, go ahead and look up E-Trade.
AMAT, we'll use the same March 29 days till expiration.
All right, what's the price right now of AMAT?
Price right now is 30. Last traded price is 38.53.
38.53. Okay.
Okay. What was our delta rule here? We're looking for a delta of 40.
Closest to 40.
We've got a 39 delta for the 40 strike price.
What kind of credit do we get on that?
That is going to give you about 88 cents.
That one doesn't sound too bad at all. E-Trade, go ahead and look up AMD there, Noah.
48.13 price. March 29 DTE. These all have weeklies. There's a reason why they're on our watch list. Call sold would be 49. Delta 0.41. Your credit here, we're looking at about 95 cents.
Wow. And last one to look up for you, Tim, is Cron. Noah, what do you got for AMD?
AMD last traded price is 24.25. We've got a 44 delta with a $1.03 at the mark.
Mm-hmm.
$1.03. And what was the strike on that one?
That is the $25 strike.
All right. And finally, Cron.
22.84. Okay, 39-day tell option in the March, or 29-day, excuse me. Same March options.
I was say 39-day cannot be March.
It's not going to happen there. The call sold, we're going to do the 25 strike at a 38 delta, and the credit looks to be about 118.
All righty.
Okay. Now, Cody, thoroughly and kind of step by step, just explain the columns and what each of those things are. Because sometimes as coaches and veteran traders, we can fly through stuff. And like DTE, I'm sure there's a student out there or a trader who's new and like, I don't know what that is. So walk us through the columns first.
So price, this right now, the price column is the current price of the stock. So to do a covered call, we have to buy 100 shares of the stock. So on a margin account, it's going to be half that, but you're still going to pay that amount. So this is the price of the stock that you need to purchase 100 shares of. Now, the month March, that's saying that we're looking to sell the call in the month of March. That happens to be 29 days out. So 29 days till expiration is what DTE is. The call sold is the price above the current price that we're selling that call to receive the credit. Now, the credit we're receiving is here, and that's per share. So we're getting 62 cents per share for Newmont, and since we have 100 shares, we're getting 62 bucks. So we're doing that at a closest to 0.4 delta rule. That is the rule that we've designed. We've done that for a reason. For today's show, I'm just going to say follow the rule close to 40. Don't ask why.
That's right. Follow the rules when you're new. Follow the rules when you're a veteran, by the way. Noah, the easiest thing in the world would be to just have some software tell us what to do, but that's not necessarily the result here, right?
Yeah.
The obvious eyes are going to go to the green boxes.
Well, it's amazing how that works.
Isn't it? Right? It's psychology, you know, it's just instant instinct. We're going to look at this 4.4% and the 5.3%. They're shiny. They're showing us green, and we're like, go. But that doesn't necessarily mean that AMD and Cron are the best trades here. How do you start to break down and evaluate, not just in this example, but any example, when you got 5 candidates and you might only trade one of them, how would you start to make choices?
Well, I do like to start out with that ROI premise. Comes back to the stock's personality for me, availability of other options. You know, I could factor in things like what would it cost me to buy protection on it if I needed to. Do they have earnings announcements, things to worry about? Volatility cycle is something I also pay attention to when I'm looking to place covered calls. I'd like to try to catch stuff on higher volatility where possible.
Mm-hmm.
So I might look at, you know, who's recently had earnings, you know, where their volatility hasn't completely dropped out, or they're closer to earnings and I still have some time to cash flow.
For sure. You know, I'm looking at these ROIs, and obviously those last two do pop 4.2, 5.2%, but they're higher volatility companies in terms of their implied volatility and their ATR relative to price, the actual historical volatility.
There's a reason these two are on the Dirty Sexy Money list and not the Tackle 25 list.
So we need
I can tell you from selling calls on both that these take more management, more experience, more time to deal with.
Yep.
So depending on what strategy you're looking at, if you have the time and you know how to manage, you've done a few of these before, awesome. Yeah, go for these. This is your first cover call. I would not recommend either of those.
You know, in the chat, just so that I have the numbers when we go to Cody's chart, somebody type in NEM 1.8%, AMAT 2.4%, ETFC 2.0%, AMD 4.4%, and Cron 5.3%. So that's our standard credit ROI. That's the credit amount converted to a 30-day number and then relative to the price and the credit that you're getting. ROID is a different discussion. We'll leave it for another time, maybe on a Friday fun day or something like that. Now let's go to the charts one at a time and let's kind of analyze these. For me, Noah, you're right. The discussion does start with ROI. We're here to make money. That's what a trader's job is. A trader's job is to make money. Cody, what's your job?
Make money.
That's right.
Make money.
Okay? We're here to make money. So when we go through these, we've got to think about which one can give us the potential for profitability. NEM was what percentage ROI did we have on this one here?
For
The 1.8.
I think this one was a
Credit
1.8. Yep. Thank you, Coach Emily. So NEM at 1.8%. Does this check off the boxes you need to justify and want to do a covered call position here? Start with Cody and then Noah.
Yes, but I would sell a cover call on this one had I owned Newmont before this move.
Mm-hmm.
So, and the reason I say that is, a management technique of a covered call is you sell at the top of a pattern movement. So this retracement move here, this would actually be a perfect time to sell the call out. Now, wouldn't necessarily want to be purchasing right now to sell out. So it depends. But as far as just getting into it right now, no, it doesn't meet my criteria.
Noah, does it check your boxes here to be 1.8% ROI at the top of the range?
I'm with Cody on that. I'd rather catch it off of a better technical setup. So yeah, that little sell signal, probably, it's not a bad time to sell a call, but I'd hesitate to buy the stock.
That's right. Okay, AMAT, AMAT.
Actually, like out of all of these, I think this might be the best one for the beginners.
2.4% here on a pullback, not a breakout.
Yeah. See, I like the technical setup here. I have much more confidence buying this post earnings. There's still going to be some premium, even though the volatility crushes after earnings. It just barely happens. So there's still some lingering premium in there. Mm-hmm. And I actually like this. I think this is, got the kind of checks all the boxes for what a decent covered call would look like.
Cody, what's your read?
I see about the same. I like the pattern that we're seeing on the chart here, where it's got this, where it's come down. Now you can tell that now it's in a high base. We're looking to turn around. This thing looks like it's going to turn over and start heading to the upside. I absolutely love this idea of buying now, selling out. What was the strike price that we sold on this one?
$40 strike.
40 exactly.
Mm-hmm.
So $40 strike, which is right there at that resistance line. Yeah, I wouldn't mind buying it right now and selling even the 40. I like this one.
Getting paid $1 to sell it at 40, that's the same as selling at 41. That's resistance. So hey, buy low, sell high. Boom.
I like it. It's a good setup as well. I agree. E-Trade, 2%. Now we're a little bit lower than AMAT. We're in a neutral range, and neutral or bullish are both fine. Got a little W pattern. You've got moving averages pinching here. If it was a clear bullish technical signal, we might just buy the stock, right? There's a reason why we're talking covered call as the market is hitting resistance. So 2% here. Cody, your take first.
My take is I like this one. So just like you were saying, great example. If we had a more clear bullish signal, we would just buy the stock or, buy a call or look to do a bullish strategy on this. But since it's in a neutral pattern, but it's showing signs of wanting to reverse, wanting to possibly break to the upside, then this is a good candidate, in my opinion, to buy now, sell out, and if it moves up there, we collect both the premium from the call sold and the movement on the stock, which is on that chart. Actually, let me go back to the chart real quick. On the Theta spreadsheet, that's your max profit that you're seeing. That's when you get the movement of the stock and the credit with coupled with one another. So I do like this setup.
Now that you look at the max ROI, though, AMAT has 6.1% potential max ROI if it does run up and hits resistance. There's some debates in here. I mean, there's never going to be a perfectly clear choice. If you don't see the subtleties when you're breaking down different candidates, you're probably not reading them with a fair and open mind. There's always a trade-off in the market. Part of our job as traders and investors is to evaluate enough information to where we understand the trade-offs and then we choose based on our strategy and our purpose. AMAT's got a little bit better ROI potential. Chart's a little bit different. E-Trade's probably a little bit more stable here. Dirty, sexy money candidates are completely different animal. Go look at AMD and Cron real quick, 4.4 and 5.3.
Before we do that, Noah, what's your thought on E-Trade here?
I like it. I think it's a good looking setup. Checks a lot of the boxes. So it's also not a crazy mover like some of the dirty, sexy monies.
Mm-hmm.
So I think it's a great place to cut your teeth on covered calls.
Mm-hmm.
Cut your teeth. I like it.
AMD.
All right. As you can tell, this if AMD wants to move, it will move. That's the easiest way to put it with AMD.
Yeah.
And right now, with it having this kind of pullback, moving with resistance right above it, I like it. It's cheap. It can move. It's just going to take management. The chart's not as pretty of a signal, but that comes with the volatility and management needed for the stock. I still cover calls on AMD.
Noah?
I have no problem with AMD. I don't think it's that dirty. It's certainly sexy, but I don't know if it's that dirty. It's not. It's not cron dirty. That's for sure.
I saw some number the other day. Their EPS growth has been off the charts. I mean, obviously they've had an incredible 2018. They had the volatility when the market crashed. They crashed too. Obviously, they came back, but they held that 200. It was on the stock and options report this last weekend. Pullback, pivot, upward drift. Yeah.
I like it. I think it's actually a pretty decent candidate. It's got good premium in it. And then the other thing I like about it, Tim, is the whole semiconductor sector looks about the same.
Yeah. Yeah.
Quick question in the chat, Nicholas. I just wanted to answer that real quick. You could do that. I wouldn't necessarily do it tomorrow if you wanted to sell a put. That's also known as the boomerang trade, where to cash flow off something you don't own yet, but you're willing to own, you sell puts against it until you get filled, and now you sell calls against it.
Let me answer that more directly, Nicholas. If you haven't back tested how to do something and proven that it works, you don't do it. Okay. So
it is possible to do, but yes.
Okay.
But I do like the idea of getting paid to buy.
I do love that. But I don't, and I love the creativity. And I know Nicholas, he's very active, team tackle. Nick, don't take that the wrong way. But if you don't know that something is a part of your system and vetted and proven, you don't do it, period. That's the way we have to approach trading.